Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Sterling Shea. He's the global head of wealth and asset management over at the Barron's Group. And we're going to take a look at ESG and investing with impact. Sterling, it's great to have you with me.
Hi, great to be here. Thanks, Jill.
Thank you so much. And sustainable strategies, they are really starting to matter.
Yeah, they're going to matter a lot more, we think, moving forward. Both the global wealth and asset management communities, we think, are going to be increasingly focused on them. There's been a huge evolution in the way people look at impact investing. Previously, it was about SRI, where you took a given portfolio, you screened out the investments that didn't align with your values, but that was always a drag on performance. But now, we found, there's been a lot of academic research that says when you start with a sustainability mandate or an environmental or governance mandate on an investment, and you build a portfolio of high-performing companies around that, it can actually be shown to be a driver of alpha. So we think high and ultra-high net worth families are going to be demanding this from their financial services providers. That'll drive focus for both the asset and wealth management community.
So you're not seeing a trade-off in performance?
No, there's been a lot of academic research lately that comes out that says if you do it right and you're a thoughtful investor around different given avenues of ESG investing. Perhaps it's lower carbon footprint around sustainability or greater female representation on corporate boards. Over time, those can be alpha drivers. There's been some good research recently from Morningstar that's been tracking and analyzing indices based on ESG companies that shows that over the period from 2012 to 2018, 41 of 56 indices that they follow, the ESG mandate, the ESG index, outperformed its non-ESG counterpart.
All right,
so the trade-off is negligible.
And you're seeing the demand in the data as well. Sustainable strategies are growing by 15% a year.
Yeah, so there's right now about $750 billion globally in ESG-related investment products, both between mutual funds and ETFs, and that's been growing at a sustained clip. Now, currently, Europe's leading the charge. About 72% of European family wealth is managed in some type of ESG screen. In the U.S., it's about 17%, but it's growing at a fast clip, and we expect that the U.S. is going to catch up.
All right, now what about the latest in data and policy around ESG?
Well, data is one area where we need to improve collectively as part of an ESG community. There needs to be more standardization around the data. I would encourage investors to look beyond the headline. There's just been a glut of research around ESG. Look a little deeper to find out financially material information as it relates to a company's given ESG score. A couple of different resources you can use. The BlackRock Investor Institute has done some great work around this. The Alliance for Sustainable Companies has also done good work, and Morningstar's comparative analysis of ESG investments.
All right, and to wrap it up here, Barron's ESG Advisor Summit, you're going to be talking about a lot of these topics in depth.
Yeah, well, ESG is just one way to invest. It's not a strategy that you should be for or against, but you should think about it as it relates to the way you align your investment choices with your values. So we're gathering the top 150 U.S. financial advisors by assets held in ESG strategies for a talk about the state of the state and the state of the art of impact investing.
All right, this is June 20th in New York City, right? Okay, thank you so much, Sterling, for joining us.
Thank you, Jill.
You got it, and thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.